Today, I see our job really is to pull together everything that we've been talking about and begin on what I would call the action plan. After you leave, after the 3 days, what are you going to be doing differently and what's the action plan? And step one of the action plan, and if you don't mind, write that down so you don't forget what you're going to be doing, is you have to take a look at the context of the market. That's number one. Before you trade, before you even touch the mouse, before you even turn the computer, well, you have to turn it on to be able to see the context. You have to analyze things in context. So that's step number one. As we progress through the rest of the day today, we're going to look at also how we identify opportunities within that context. Then what you want to do is how do you qualify that opportunity to make a decision whether, in fact, you are going to take advantage of that opportunity or not. The market will offer us an abundance of opportunities. A smart trader is selective in which opportunities they take. You don't want to be taking every single opportunity. You want to be taking the best opportunities. And the way that you identify the best and the most profitable opportunities is through the qualification process. And this is where we begin to sort of apply some of the techniques that Trevor talked about and some of the techniques that Anthony's been talking about. So we're going to try to bring it all together. So the very first slide is really to emphasize this point. And remember, you don't want to be what I call a Tarzan trader, all right? Tarzan comes in, yells, into whatever crisis, no preparation whatsoever. All he has is his underwear, that's it. And he's ready to tackle it. I can't begin to tell you, in my experience and in sort of dealing with a lot of traders, how many of them actually take this approach to trading. They flip the machine on, turn on the dome, and they're going to trade. And then they cuss and swear at the machine, at the market, and everything else. If that's how you're going to trade, you are really looking at blowing your account. It's just a question of time of how quickly you will do it. Or hating trading and leaving it. That's not how seasoned traders do it. You have to do your homework. Okay. And what do I mean by your homework? The homework is really studying what's happening in the market relative to the particular instrument or instruments that you're going to trade. Depending on your level of experience and what you've done in the past, I always recommend you start with one single instrument, get to know that instrument well, and after you've been successful with it, then expand that knowledge to another instrument. Changing instruments around, saying, oh, well, this one, the ES is that damn ES, I hate that. I'll do much better with the NQ or the YM or what have you. The problem is not with the instrument. The problem is with how you're tackling that instrument. So don't deceive yourself by trying to change the wrong thing. What you want to change is the pattern of how you trade. And when you change that, you will then begin to see, at least change it in the proper way, begin to see improvement in what you're doing. And always remember the old axiom. If you keep doing the same things over and over again, expecting different results, what do they call that? Insanity. Thank you. I'm glad you all know that. All right, so no insanity, no Tarzan trading. You have to be prepared before you begin. So how do we get prepared? Well, if we're going to trade within the day time frame, I must be looking at a higher time frame. If I want to know what's going to happen today, I need to do it in the context of what's been happening this week and last week. So it's very important to look at weekly profiles. They give us a ton of valuable information, and we will look at what some of that is together and drill down through it. The very first thing I want to do within the week where I'm trading is to take a look at, am I within value for that week? And where is the value of the current week relative to the prior week? Okay. and notice the extent of the different variations in value between each week. Value area high, value area low. Take a look at that. All right. Now, so rule one, where am I relative to value? If I am above the value area high of a particular week, what does that tell me about the market? Not necessarily. Not necessarily. If I'm above value, it could be that I'm in a condition where the market is going to reject prices. I'm going to come back right down. Okay, so just because I'm above value, that doesn't automatically mean it's bullish. So now I have to be careful. I have to look at what I am seeing happen above the value area high to be able to make that determination. All right, what if in fact I am within value? What does that tell me?
You're in balance.
Okay, not necessarily. Not necessarily. Okay. All right. It really isn't. Okay. I am within value here, aren't I? And you can't tell me that I'm in balance there, can you? That's an area of imbalance. The first thing I'm going to teach you is to break down the value area of the prior week into 4 quadrants. Okay? So you're going to take value area high, value area low, add them together, come up with your midpoint, and then break up each segment, the top half and the lower half, and so on. So you have the value area now broken up into quarters. And this is very important, by the way. You're beginning to get into sort of the magic territory of the market. Where do you open in which one of those value quadrants is very important, very telling, and very revealing. Okay? Am I in the top half? And if so, what starts to happen? Do I hold the mid and continue higher? That's very bullish. I'm going to continue on. If in fact I'm in the lower half, how far up am I willing to make it towards the value area high? How many of you use the quadrant technique when it comes to value area?
Can you repeat that again? How you...
Okay, all right. All right. Everyone is familiar with what a value area high and a value area low is. So let's say I'm going to trade in this week. I would go back to the prior week. Forget the volume point of control at this point. I'm not talking about volume points of control, just value area high, value area low. The first thing I want to do is calculate the mid of value. So I have this number, this price, plus the price above it, add the two of them together, divide by 2, what does that give me? Midpoint, thank you. All right, so now I have my midpoint calculation.
Of the previous week.
Of the previous week, very good. Yes, sir.
You only use the value area of the price or the volume as well?
I always use the volume value area.
Okay.
Always volume.
Okay.
Okay. As a matter of fact, I am a very big proponent of volume
Okay.
because volume is the fuel that moves the market. Price will react based on what volume is doing. So these are all value area highs and value area lows. Yes.
I'm sorry.
Volume based. I'm sorry.
I'm confused. The colored histogram that's on there, that's time or volume?
Okay. The colored histogram that you see here will always be on any profile what they call the TPOs, and it will be time.
Okay.
Then sometimes you will see a volume histogram associated with that. However, in the setting of the software, in terms of identifying your value area high and value area low, almost any platform worth its salt will give you the option whether you want to determine those based on time or volume.
And these are based on?
Volume.
Okay.
Excellent. Exactly. Okay. No, good questions. They're all very good questions. Yes.
So devil's advocate, I usually do a fib on the balance area or the cluster.
Okay. That's another technique as well.
Okay, so one's just an art form versus another, or is there advantages to what you're talking about versus the cluster?
Okay. I find that my technique, the breaking it up into quadrants, is a little bit easier to understand and easier to use. The Fibonacci is another way to approach and organize the same thing that I'm looking at. So if you prefer using Fibonacci, you know, that I'm 100% fine with that. So it's just a matter of its preference.
But putting that, whether it's quadrants or fib, on a cluster, so for instance, that second to the last day, you would have a smaller.
Wait a minute, what second? These are all weeks.
Or second to last week.
So this one here?
Yeah,
Or
notice how the value.
this one here?
No, the one to your right,
This
yes,
one.
sir.
Okay.
So notice how the cluster is half of the value area. If you would do the top of the value area down to the POC,
Uh-huh.
that's kind of the cluster that I would be looking at.
Okay.
To measure off of versus the whole value area.
Okay. So what he is proposing or suggesting a different analytical technique. What he wants to do is focus rather than the entire value area on where the cluster is and then break up the cluster into Fibonacci levels. Correct?
Correct.
Okay.
Shoot that.
I'm sorry?
Shoot that.
No, I won't shoot. I never like to shoot anything down. Okay? No, I'm serious. What I'm here to do is really share with you my experience. Somebody else may have something that's better or smarter. I'm all ears. That's how all of us get better, to share knowledge and to learn from one another. So by no means would I shoot anything down. And as a matter of fact, since I haven't tried that and I haven't done that, I am unable to really evaluate for him how it is relative to what I do. And to be honest, I would have to study it and sort of see what would work better out of the two. But what I can share with you is my technique works. And I will tell you right away, already you've shown something. And that is, if we were to draw the mid, take a look at the mid of value and where the cluster really is. Right away, you know that that's a bullish week, because the cluster sits above mid value. Not only that, the volume point of control is above the mid, right? So already you have two things that are telling you we've got a bullish bias from the prior week. And by the way, once we use weekly data, the information that we get from the week is far more powerful than we get from a day or half a day or an hour or 30 minutes and so on. So you got to get out of the short time frame and start looking at the big time frame and what's happening. Yes.
Just wanted to clarify, yesterday you talked about your week as being the previous 5 days. So
Yes.
do you do a rolling 5-day weekly profile?
Yes, I do. That is correct. I do the rolling 5-day when this week is in its infancy or in the beginning. So I still want data from this prior week. But remember, even though I'm doing the rolling 5 days when this is the current week, this week has already formed, and I can perform the analysis I'm describing for you because that prior week is already in place. So my current week is based on the last 5 days, but my prior week gives me the parameters that I need.
Okay, so so let's say on Tuesday of the current week,
Right.
you would still have the Monday through Friday of the previous week
Right.
as a profile, but then when you're looking at your current week's
Right.
profile, you are looking back 5 days from the Tuesday.
Very good, exactly. So the analysis that I'm describing now, the quadrants, I'm doing always for a week that's already been formed, because that's going to influence my current week. And the levels I extrapolate from it have a lot of relevance, and you will find are very important as we progress.
So, Dr. Kepler,
Yes,
so
sir.
every day, let's say it was, today's Wednesday, let's use today. So Wednesday, you're analyzing, you're gonna put trades on today. So you're looking back 5 days from today to analyze the trade you might put on today.
Okay, I'm doing two things, okay? Let's say I'm Monday of the week.
Okay?
On Friday, I completed a full week.
Yes.
The analysis I'm describing now is to be done on the week that's been completed, which I will always refer to as the prior week,
Okay.
okay? Now, starting Monday, I have what I call the current week. My current week is based on the last 5 days. So it really eliminates Monday from the prior week and looks at Tuesday, Wednesday, Thursday, Friday, and today, Monday. That's my current week. So anytime I use the two terms, you can discern which is which. Prior week versus current week. All right? Okay. So once we've done this analysis, you want to take a look at each day in the following week, where it's opening relative to which quadrant within the prior week. Okay? And more importantly, where that day closes. Yes?
I heard you put it in quadrants, quarters, so I get the half mathematically.
Right.
Is quarters mathematically?
Yes, yes. So once you have the half, do the same thing that you did with the value area low and the value area high, meaning add the midpoint to the value area high, divide by 2, and you're going to get a line up here that will be 3/4. Similarly, take the midpoint, add it to the value area low, divide by 2, and you'll get the level at 1/4. They're really very simple, easy calculation. I'm sorry? Of course you can. I'm just trying to simplify it. Okay, I find that people, you know, math you can do 12 different ways and get the same answer. So whatever you're comfortable with, do it. The end result is I want to look at value in terms of quadrants. And you can already see the benefit of that. I mean, without me even explaining it, because you begin to see where price is moving, where resistance is, and it helps you to stay on the right side of the market based on the prior week. Okay. As simple as this is, I am always amazed at how few people actually do it. I don't, you know, I can't tell you why. I don't know why.
You're saying the funds do it, the big guys must do it.
Of course, of course. Right, any professional trader will have certain levels that they take a look at and so on. As a matter of fact, I will go a step further for you. These quadrants for the professionals are predefined for the week. In other words, they know how much they're going to lift it based on the range of the prior week, and all that is predetermined for the week and for the month.
They come in and they get a sheet of paper in the morning, tell them.
Well, it's you know, we're going to lift up to this level, and you know, we're going to go up to that level. At this point, this is where we're going to start selling, and so on. They always have a plan.
Where do we get copies of that?
Why don't you put it in the Wall Street Journal?
Well,
This is Business Daily.
I guess well, yeah, I won't. All right, that's the kind of stuff that will put you in jail. I mean, if you manage to get your hands on it. Seriously, that would be insider trading. And that's what I mean, you know, when people think that markets are random, there is really nothing random about the market. It's very well organized.
So if we're trading daily, we look at the weekly, but if you're looking more like on a stock, a lot more of a longer term investment, would you develop a monthly into quads? just like-
Absolutely, absolutely. Same exact, I'm sure you've heard about the fractal nature of the market. Have you heard that term before? Okay, good. So everyone is familiar with it. I don't need to explain it.
No.
Okay, all right, good. I mean, good. I'm glad you pointed out that you're not. Anytime I say anything that someone is not familiar with, please stop me and have me explain it. Okay. The market works in a fractal nature, meaning that every 1 minute is influenced by what happens every 5 minutes. And every 5 minutes is influenced by what happens every 30 minutes. And what happens 30 minutes is influenced by 90 minutes. 90 minutes is influenced by 120. 120 by the full day by the week by the month by the quarter by the year. That's the fractal nature of the market. Did I get it right? Okay. That's what it, so you have to be cognizant of the fact that whatever you're not doing in a vacuum. It's influenced by forces that are much higher. And that's why the higher the time period that I look at, the more reliable the information is about what's likely to happen in the market. And that's why those quadrants become very powerful relative to each day, because I'm looking at what's happening relative to the prior week and the value of the prior week. And then also when you analyze what actually happened, even before you begin the current week, and you see, as the gentleman pointed out, take a look at where the cluster is. We see that this was all rejection. It was brought up. The bulk of the trading was on the upper end of the value area, above the value area high. So right away, I know I had a bullish week. Okay? I wouldn't be thinking about shorts. Now, notice what happens the following week. Prices come back down. Okay? They get bought up, and then we begin to develop another cluster here, and notice where it's developing. Again, in the upper quadrant of the prior week. So it almost is begging me to go long to know that we're going to get higher. This is where value is being pushed. And this is what we mean by the value of the profile helping us to track value.
High time frame halfback.
I'm sorry?
Everybody Dalton is a high time frame halfback.
Yes. The higher time frame will always influence the shorter time frame. The next thing I want to really highlight and have you sort of keep track of, because actually it's a little bit harder to do than the quadrants, is to identify from the prior week where the peaks and valleys are. For this week, here's a peak, another one there, and then from the prior week, they were up here, and then maybe one here, and then we have one here. Now, I talked about this before, but I didn't call them valleys and peaks. The term valleys and peaks comes from the structure of the profile, the visual of the TPOs. Can someone translate for me, what do we mean by a valley and what do we mean by a peak? It's close, but not really quite accurate. I could, in fact, have a peak that doesn't have a lot of volume.
Low TPO, high TPO.
Time where the market spent, price levels where the market spent a lot of time. That's the difference between a high and a volume node and a valley and a peak.
Right.
Okay, so areas that are valleys, the market really did not spend a lot of time in those zones. I'm not talking volume at all here, we're just talking time. So when the market doesn't spend time in a particular area, what does that tell me? Okay. That's the market shot right through it. That was what.
Is that rejection or
I'm sorry?
momentum? Is it rejection
Well,
or momentum?
It could be either or, actually, but most of the time it's really momentum. Okay. And some could argue that the reason we had the momentum is because it was rejected. The reason for the momentum is
Yeah,
rejection.
but now I have a big buyer coming in, I should be going long as immediately there.
Right. And I want you to get away from the idea of thinking one single big buyer. You have an aggregate of buyers. You have buying pressure. So think of it more aggregate. Because usually it's not going to be just one single buyer or one single seller. It's the cumulative effect of what's going on in the market. But certainly it is bigger participants, more powerful participants. So your peaks and valleys are very important, and also the low and high volume nodes. Those you have to get off the histogram. I don't have them on this particular chart, but they are equally important. The reason I highlighted the valleys and peaks is because they too become important. Because notice what happens, especially from the week. Valleys and peaks mean nothing on a 3-minute bar. But on a weekly bar, that's important. That's when they begin to mean something and have relevance. Notice what happens, for instance, when we come close to this particular zone where we had a peak at the cluster. Buying was very strong. it actually confirms what we saw from this particular week. This was below value. It brought us up here, and this was the level of activity. When we come back for a retest, we know, especially when we see this single print on the week, and we had a low valley or a valley area here, you know, this is where most of the option traders I know put on a call right away and play it using an option. Option traders rely on weekly charts, not on the daily charts. They make their buying decisions based on the week because they're looking at longer time frames. So they see this happen on the current week based on the prior week, and right away they're in the market with a call or more than one call.
For Captain,
Yes, sir.
question. Now we have the previous week, you have a lower node,
Yes.
okay?
Well, you have a valley.
What, this,
Here?
no,
This
no,
one or this
no,
one?
No, below.
This one.
Below,
Below it?
right? Yeah, this, I'm just.
This node here.
Yeah, this.
Okay. That would be a peak rather than a low valley node or a valley.
The following week came down and tested this area.
Yes.
And then we started having single,
Right?
going up.
Right? Single, double.
Yeah.
Okay.
one
The old
second.
analogy that I use, the sharks. The
That's,
sharks are
singles, yeah,
in the water.
That's, to me, I'll jump on it with both feet.
wonderful. That's what I want to hear. All right. That's great. That's what you should do. That's why I'm highlighting it and pointing it out. So I'm glad that you are already doing that. The other thing that's interesting to look at are these bars at the bottom, which show the total volume for the week. Weeks that tend to have higher volume than other weeks usually give me more significant points that I should really be tracking in the market because they had heavy volume. Okay. Now I'm changing the visual on you. I am now operationalizing the concepts that we're talking about. So now I've moved it to a candlestick chart. And I've had to scrunch them up because I'm using 30-minute bars. And the purpose of this chart is to show you the power of weekly information even on a 30-minute chart. And notice how well it respects the weekly parameters coming from the week. Okay. These are now we're looking at low volume nodes for the week. We're looking at the volume point of control, value area low, value area high, and more low volume nodes. Now notice we drop below value, come back up, get inside value. We begin to have a low volume node, pop right above it, holds, becomes a support level, continues on to the volume point of control. This continues to be support, continues higher, jumps right through those low volume nodes, and notice it gets all the way up to the value area high and closes close to the high. Yes, sir.
Those horizontal lines were all referencing the prior week, or those are being built?
Those are being built during that week. That's a current week chart developing. I will show you one where we reference the ones from the prior week. Okay. Now, this one just highlights also the day session volume because these are 30-minute bars. So I want to remind you the highest volume in the early initial balance and in the ending balance for each day. You can see them. It's very visible. Each chart, even on each candle, even though those are 30-minute candles. Now, we're going to get into looking at daily bars within the context of a full week. And this is for position traders. And you will see the potential for making money now when I begin to identify for you opportunities from this type of a chart. Once again, this is my weekly profile. So this is the prior week, this is the week that preceded it, and this is the week that was even before it. All right, and this is the current or the last week. And my job now is to try to work with you to identify the opportunities as they occur relative to the prior week. So let's take a look and see what we can identify from this particular chart. If we were to take a look at this week, and by the way, each of these candles are 930-minute candles. So we begin with an evening session, a day session, evening session, day session, evening session, day session, evening session, day session, evening session, day session. 10 sessions per week. Yes, sir.
He said 930.
30 minutes. That's for the ES. ES, for the ES Mini.
Right.
So that time frame would certainly vary if you're dealing with a stock or if you're dealing with another instrument that trades on a different time parameter.
Yeah.
So this is based on the CME
It's the morning session.
day, right, I'm calling the morning session is the day session for us. The evening session would be the night session, or Europe and Asia. That's correct. Breaking it into just 2 sessions instead of 3. Everybody familiar with that context? Okay.
What happens if you have a commodity that opens in London at 3 o'clock in the morning and closes in New York at 1:30?
Okay, all I would do would be I would adjust my time parameters to reflect the trading pattern of that instrument. And most profile platforms will give you the option to adjust the sessions to your satisfaction. They give you, a lot of flexibility to do that.
I mean, CQG just give it to you as one session and then I try to break it down.
Trevor, does CQG offer that flexibility?
Yeah,
Okay.
contacts CQG supported. They can build custom sessions or whatever you need.
Okay.
You can build the session yourself.
Well, yeah, but if you need to contact them, contact them.
Okay.
All right. So now, the strategy for trying to identify opportunities. And my first question to you, I've given you how many weeks now? 1, 2, 3, 4. Let's just say 4 and forget that partial week on the left-hand side. And I need your help now. Spot for me where you see or you can identify buying sharks in the market.
The sales, some of those kind of.
Excellent. All right, so here's one. Here's one. Certainly, we said not to look here, but certainly here's another potential one there. Absolutely. Those are all potential. There they are. We've identified them, okay? Now, I begin with those because those help us to begin to hone in on where we might have both intraday opportunities as well as position trade opportunities. We want to always piggyback on their activity. All right, so we see one here, one there. All right. Let's begin with this guy here. Let's see if that's the one I have. Okay. Before we move away from the sharks, here are the negative hungry sharks. So we know where the sellers are, and we know where the bulls are. Okay. And by the way, this is one instance, since some of you have asked about this a number of times, where I begin to integrate candlestick patterns with the profile. They're 2 very good tools, and since I'm using full session, evening and day sessions, I can now begin to use the 2 together to identify an opportunity. And let me begin back here with this as an opportunity. Well, we know we know that we had a double top. We have, well, that isn't quite a doji. It's, what would we call that? A tiny hammer or? A spinning top, okay, spinning. So, I'm sorry?
A little stick.
A little stick, okay, all right. All right, here it is. Nothing little about it. All right. All right, here we go. All right, so now we have first of all, we have two double tops that were rejected above. The dark blue is a high volume node. The light blue is a low volume node. So now, since we're looking at volume distribution, I'm not looking at peaks and valleys. I'm looking at high and volume low nodes, okay? Remember also my rule about a high volume node followed by a low volume node. Notice price drops all the way down to there. So that rule is golden. Believe me, it works. Okay. So now I have the double top in a zone above a high volume node and a developing volume point of control. On the second day, I open. Now remember, evening session, day session, evening session, day session. I open and I can't get above that high volume node. I drop and I take out the low of the evening session. How many of you would think that that's a worthwhile short trade? Okay. Only 3? I need all hands to be up right now. Come on. Absolutely. Absolutely. Okay, those of you who did not see that this would be a worthwhile short, what would be stopping you?
Trend was up.
Okay, the trend was up. Yeah. That's correct. Okay, but double top, we have a shark here that has started selling 2 consecutive sessions. The highest volume node with the open, I was unable to get above it, and then I begin to take out the low of the prior session. Okay. All right, let me say, okay, you were still hesitant, the trend was up, and you didn't want to take it at that point. Well, how about when price drops below that high volume node? Would you be willing to take it then? All right, great. Then you would want to take that. And where would your first target be? No, the value area high of the week. Okay? Because that point of control really is developing at that point. It isn't, we don't know about it until the week has closed. See, it came all the way down to here, and then popped back here. So your value area high. Okay, second profit target. Would anybody help me with the second profit target? From the prior week. The developing value area for the prior week. This would be your next target. And notice how it also sort of stopped it down here a little bit, and we tried to get up above it when we got to that zone. Couldn't hold, and then we started dropping. And you will begin to see here, we have a high volume node at the open. We get up to here, and then the following day, we can't continue higher to get above the value area high, and we continue to drop lower. Now, remember what I said about trading with the wind behind your back. Here's the strong wind. The first, the double top. Second, a high volume node. All right. Third, then I have a low volume node behind it. This should help my confidence. I have a lot of things really supporting my decision. It isn't just about one thing. There are a number of things going on. And then I begin to monitor what happens at each of my targets. What happened here when we got to here? We continued lower. Now this happens to be the volume point of control in the week, but at that point, this was really my reference point that I was looking at. And the key question is, what happened when we got to the value area high of that prior week? And then what happened when we got to the mid of that prior week? I'm sorry? Stopped, exactly. Notice that. Notice how it began to respect that mid-level, and we started to hover, and then we started to head back up again.
That's where you probably got the absorption trade.
Well, the absorption trade from Trevor, and as a matter of fact, we were talking about that a little bit earlier, really began up here. So we could have gotten in on it very, very early. And I will give you another tip on those absorption trades when they do occur. Trevor has identified for you the key trigger when it begins at the very top. But the next thing that you want to see is at least 2 consecutive sell imbalances below the absorption level that you've identified. When you see that, that should increase your level of comfort. You've got the absorption happening, and then 2 consecutive sell imbalances below it. The wind is at your back, because then you're able to get in with a very tight stop loss.
You know, that's what I was going to say, and add to your point, is everyone's got to realize, and I don't want to steal the thunder from our next segment, but in this circle, John has illustrated here, and these are all dailies. There's a lot of stuff going on in there, and John pointed out, he drilled into some detail. We're going to talk about this more in the afternoon. To Carl's point, like, well, it's an uptrend, maybe I wouldn't want to take a short. But then when you drill down, you'll see some B2B moments also, right?
Right.
The shorter time frames are transitioning
Right.
down, and it's that.
See, when you do this analysis and you're trading during the day, you know that you want to be on the short side, not the long side, because of what's happening from the weekly chart, from the context, you see? So you want to forget all about those longs at that point. Or if you're going to take them, be cognizant of the fact that they're going to be retraces. I'm really fighting against the wind. So whatever you get out of them, be modest and reasonable. It's just going to be a short-lived trade. Whereas when you have the wind at your back, those are the trades that will produce for you.
I love wind behind my back.
So do I.
What is the significance of the volume?
Well, I do because I sail, but I don't know why he does. Okay, go ahead. I caught it, but it was a little late.
The volume histogram that you have on the left side?
Yes.
What's the significance between the green and the blue coloration?
Okay, you mean this one versus that one?
No, not the lines, the actual histogram, the histogram.
Oh, the histogram,
Yeah,
okay.
two shades.
Anytime you're within value, it's green because that's the color I use for the value area. Anytime I'm outside of value, then it's blue because I'm outside of value.
Okay, thank you. And these are 70 or 90% of value areas?
70%. This is just, and the quadrants are always based on the 70%. Okay. Anytime we get into the 90% is when you should begin thinking, do I have exhaustion or are we going to continue higher? And usually if you've gotten to 90% after a big move like that, there's a much higher probability of a retrace than there is of continuation. And this is what we mean by looking at things in context. You know, when you analyze from the week, it guides you as to what you need to be doing during the day. Do you see why the Tarzan trader falls flat on their face? Because they don't do their homework. They don't really, planning, exactly. They don't really think ahead. What's really going, which way is the tide going, and which direction, which side of the market do I want to be on? I don't want to go against the headwinds.
Would you call the double top like excess at the high?
We can call it. My good friend Jim Dalton loves to use that word excess. Fine, if you want to call it, you can call it anything you want. I call it a call to action. The market is telling me, pay attention. Twice we've rejected this particular level, and it was rejected forcefully by powerful players because this is a daily chart, not a short-term chart. So pay attention. Call to action, minimum action, pay attention. What's happening here?
If I may share something with the gentleman here. When I was in Schonfeld, which is a prop desk, I kept a log, which I still do, but I kept a log basically with my mistakes. And that cost me money. In one of the months, it cost me like $45,000. 70% of my mistake was not following my plan. So it's about $28,000. So by sticking to my plan, I saved myself 28,000, you multiply that by 12, that's $500,000.
Absolutely. Absolutely. Especially when you have a good plan.
Right.
That, right. Exactly. Especially when you have a good plan, it makes a lot of sense. Yes.
And I'm sorry to ask.
No. Never apologize for asking a question.
The light and dark blue lines again are the.
Okay. The high volume and the low volume nodes. And intentionally, I made the high volume darker blue and the low volume lighter blue. So there would be a visual reference. Yes.
But I see you only have one per week. Is that?
No, it isn't that I only have one per week. The software identifies for me those based on a criteria that I give it. And so your question is excellent because, yes, how do we get those high-end volume nodes? Okay. The software asks you, how many prices do you want me to take a look at and identify the high and low volume nodes within that price, within those aggregate of prices. So I could choose 10, I could choose 20. That's at my discretion. The more important question now is for the week and for the instrument I'm looking at, what is my setting? I choose 20 for the ES. Okay, 20 divided by 4, that's 5 points. So within every 5 points, I want the software to identify for me the high and low volume nodes. So that was a good question, and never apologize for asking any question. That's what we're here for. And I'm asking you guys tons of questions. So it's a two-way street. All right, so we have another opportunity, and we have a similar trade. And notice that the reason I wanted to highlight this is how they're reoccurring. These aren't opportunities that sort of once in a lifetime kind of thing. These things happen every week. We begin to take a look at this. We come back up. We have rejection. We have excess. We have a call to action. We're unable to get above the value area high. We begin to drop. We take out the low of that session, and we continue to drop. We actually drop below the mid of the prior value. So now we know that as a target, this low of the prior week and that low are going to be tested because we took out the mid, we took out this value area low, then it goes next after the mid of this week and the value area low of that week. So this is how you pick your targets. If the prior week gives me no more targets, then look at the week that preceded it. Now I'm looking at two weeks rather than one.
That was actually very nice because it retests the high from the beginning of the week.
Yes.
That was rejected.
Yes. So they don't happen consecutively. They happen at it's a second. But notice also how look at the magnitude of that candle, and then that in fact it gets wiped out that was that wipeout Trump Jr. day. Take a look at that. But still, you could have picked it up from the chart. Okay. And now you see that the market picked it up, we brought it back into value, and then we started to come up, and we ended the week on a negative note down here. We opened the new week, and we're in the lower quadrant of the prior week. And then what happens? We come up, and we come right up to the mid. Notice how those magic levels that I point out to you actually do work? Okay. Now, how did they know that that was the mid? Somebody must have told them, because this is no coincidence, and I'm willing to bet you that almost to the penny, this was right at the mid of the week. Yes?
Do you think, because that's one thing I've noticed too with like news events, is that it seems like they're almost like predetermined by the chart in some way. I mean, you could have kind of seen that that was going to be a short move. And when bearish news comes out, do you think that's why like that move right there was maybe hyperbolic? Maybe that wasn't, maybe like the Trump Jr. like fueled it to where it was already kind of being planned to go down, and then it just kind of threw gas on the fire? Is that kind of what news events do essentially?
Usually, news events provide the justification for what happened in the market, but they usually don't drive it.
But yeah, I'm wondering, like, it seems like,
Let me give you an
Yeah.
example, because today is going to be a news day, and I've been sort of trying to watch for it. Has anybody been looking at the market? Yeah, the FOMC. What happened after they announced? Because they haven't announced yet? Wait a minute. We're 1 o'clock Central?
You're on Pacific.
Oh, oh, that's right. Usually at 11 o'clock my time, and we know. So, all right, different time zone. I'm sorry. So, all right. So we have to wait till 1:30.
Well, Peter's got Trade the News open, right, Peter?
I can put it back up.
Well, when it comes, maybe he could do an audio, because you and I will be doing our session together.
Okay. Yeah. And then we want to take a look. So, but more importantly, what I want to show you is I want to show you that we know where the market is going before the FOMC announces. How's that? What a parlor trick. I can actually tell you what is going to happen before it actually happens.
I like it.
I'm sorry?
That's interesting.
Yes. And you can, because the market has it already baked in. And you will see, you'll be able to, I'll probably have you tell me. I won't tell you. I'll have you tell me based on our discussions and where you see we are relative to the weekly quadrant and so on. You're going to tell me this is what's going to happen when the news comes out.
You're not gonna tell if it's bullish or bearish, you're just gonna tell us where it's gonna go, it's gonna be bearish.
I'm going to tell you whether we're going up or we're going down.
No matter what they say.
You're a Mrs. Doubtfire now, yeah.
All right. We'll take a look at the analysis together. And actually, I want you to tell me, because I want you to use the stuff that we've been talking about and put it into action and see that it actually works. And I am confident that it does. You'll see. All right. So we had another opportunity there. Now, I want to highlight traps, because this could be misleading. It looks like we had a shark come in, okay? And then we weren't able to make it all the way back up to the value area high. We came up for another retest, but notice what happens. We drop right back again. Who can tell me how I could have avoided that, or how would I have been able to avoid that? Can anybody see the telltale signs on the chart? There's something else in addition to the value. Thank you. There, you spotted it. Okay. See this prior developing value area? Okay, it stymied me. When I see that, if I was long in this trade, I always want to trade with these things, the wind behind my back. I never want to trade head on to a developing volume point of control. Okay? This is why those developing volume points of control are very, very important. Yes?
would you mind maybe elaborating on developing volume point of control a little bit more? Because I thought it was like, while a profile was forming, it was the value area until it wasn't the value area anymore. You know,
No.
and I think I'm wrong. So
You
what
are
is it?
wrong.
Yeah,
Okay,
well now I can
okay,
see that, so I was
okay,
wanting to know
alright.
what it is.
Okay.
So,
Yeah.
yeah,
Question?
I guess out of saying, I'm confused, I guess, when I saw what you pointed at, but is that week's developing point of control or the prior week's developing?
All right. This one right here.
Yeah, what is that?
Okay. Was this from this week or was it from this week?
Right.
All right. Can anybody help us with that? From that week, this week. Why is that? Notice, this is the beginning of this week right here. Okay? So this was from this week. And here, at this point, it actually took us higher. But then it became resistance when we tried to come back and go through it, which is kind of interesting.
In your experience, how long do these DPOCs have persistence as important levels?
As long as they're on the chart, pay attention to them, especially if they're from the week or the month.
Well, what is it first? What is it developing?
Okay. I'm back to Jeff's, right?
Yeah, so is,
Okay.
I think maybe I said it wrong, because is it, like at one point that was the
Okay.
point of control,
All right.
and
Well,
then it wasn't anymore?
Let's talk
Yeah.
about it for a minute, okay? When we open any session, okay, we start with a price level. correct? And we have a certain amount of volume that starts to trade at the open, above the open, and below the open as the market sort of rotates. With me so far?
Yes.
Based on that, we begin to calculate the value area high and the value area low, right?
Right.
70%. We take a look at the total volume and we identify where's the value area high for the volume that we have within the range that we have, and the value area high and the value area low are based on that. How do we calculate the value area high and the value area low? Where's my reference point?
It's like one standard deviation on each side, isn't it?
Okay, that is correct on the normal distribution, but that's not how it's calculated on the profile.
Oh, it's not?
Oh, absolutely not.
70% above, right?
70% of the volume, that is correct.
But isn't that two standard deviations? Or like within an empirical curve?
The reason we look at 70% is it comes conceptually from the normal distribution, and that does represent two standard deviations.
Oh, so the market profile isn't calculated by finding the mu and then subtracting a sigma?
Absolutely
plus-
not.
Oh,
Absolutely not.
Okay, all right, that's different. I didn't know that.
How many of you actually didn't realize that the market profile does not calculate based on mu and that the normal distribution formula?
I thought it did. That's my bad.
Okay. I bet you that a lot of other people did too. That's why I wanted to go through it.
Would you be kind enough to repeat that again?
Okay, all right. Okay, and this is sort of some of the misconceptions about the profile. The way that we calculate the value area high and the value area low, let me explain to you how it works. We open with a certain level of volume. Then we take market fluctuates above and below. So we have fluctuations in volume. We now try to identify where is the highest level of volume within that fluctuation, and that becomes my reference point. And then I begin to tally my value area high and my value area low based on the aggregate of 70% from the total volume within whatever range I have. And that's why we also have what we call a developing value area high and a developing value area low. So the week didn't start with these where they're at. These developed. They went up, down, and so on. And I'll try and sort of show you another chart a little bit later with a developing value area high, value area low. As this is developing in the market, my reference point, which is the highest volume within the range, is also changing. And that's what the developing volume point of control is. There is no mu, there's no average. I do not use the square root and the formula for a normal distribution at all. This is how the value area low and the value area high are calculated for the profile.
Does the
I'm sorry?
developing area show up?
Yes, it does. You
No,
can-
when does it show up? When did that?
the
little
minute
line-
the minute the session opens, you begin to see. Let me see if I have.
Isn't there a
Is that
way to
there
show
at
it
that
on
time?
market delta? Don't they have that,
Do you have it on?
the developing value
Um,
setting?
Let's see if I have it. No, I don't have it on the. Okay, I promise you on the next slide, I will on the next presentation, I'll pull up some slides and show you a developing value area high and developing value area low. In this case, because I rely far more on the developing volume point of control, I highlighted the volume point of control. I thought everybody knew about developing area high and developing area low. So
It's just
forgive me.
tracking the dynamic.
I'm sorry?
It's the developing value point of control is just tracking the dynamic nature of the point of control.
Right, exactly. And the dynamic nature of the value area high, value area low. And so the only time we get these levels is when ultimately the dust settles and the week is over.
So on that week that we're circled with Trav,
Yes.
there's a developing point of control at the
So
top
here,
of the ending candle.
when we opened the day, when we opened the week, this became a developing volume point of control. So at one point, this was in fact the highest volume traded within the week. Now notice, the value area high probably went up a little bit and then came back down if we were to look at the developing. Because if you notice,
That became PFC.
right, the developing volume point of control jumped all the way up here. All right, and then the value dropped, and this became the area of value.
And then that PSC that, or the developing PSC, when it closed, became the real PSC.
How about rather than the real, the final?
Oh, that's fair. Yeah, that's fair, yeah.
Because these are not fake either. There's no such thing as a fake developing point.
So that would mean like on the rightmost week, if we haven't completed the week, the high value area and the low value area are really the developing high value area and the developing low value area.
That's true.
until
How many
the week
candles do I
closes,
have?
right?
1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We did complete that week.
Yeah, but if we didn't, I'm just
Right,
saying that
those
it
would
would
be
be
the
developing
those
as
would be
well
low.
until that completes,
Right.
just so, okay, got it.
I'll show you a chart with developing value areas and because they look very different as they develop as well. Okay.
And
Yes,
so
Kristen.
you said even though those change over they change position over the course of the week, you still when you're going back and reviewing what happened in previous weeks.
Those become very important levels. Those become, from the prior week, they're very important levels. Absolutely. Do not ignore them. They are very important from the prior week and can come back to stop us, can come back to help us as support and so on. They're very, very key levels. But I'm glad now that you saw you don't want to buy into one of those developing value area points. Okay. Another nice utility of the profile is it helps us to identify brackets. Notice it's squeezing me here really between the volume point of control, the value area low, and really the value area high as well. And a nice easy trade would be when it drops below the volume point of control, I would sell and I would pick it up again as it heads higher. So this kind of a pattern is easy to spot on the week and makes it also easier to trade. Because remember, when I see this, I know that I'm in a non-trending state within the market, and then I know that I have to play it with a non-trending strategy. So it helps me even intraday because each of these are actual evening day sessions and so on. So in planning my trades, sometimes I don't know, are we trending or non-trending? This helps me to see that as it's occurring. So if I see this bar, then that bar, and I see that we continue to be trapped within this particular zone, when we get out, I watch what happens. Do we continue lower or do we come back in? If we come back in, I want to be a buyer, especially if I can be above a developing volume point of control. Yes.
Okay, so now I got all that now. Those are full session bars.
Yes.
So how do you hone in on you put your stop in? 'Cause I can see where you entered a trade, but you got a big whip on top, so if you say, oh, I'll put it at the...
Well, remember, when that wick happened, actually there was a point when prices were heading higher.
Right.
And so what you want to do is, as you get above the developing volume point of control, you know you're going to head up for a retest of that level, which really was, let's see if that was a high volume node at that point, or possibly if we're going to come up for a retest of that level, which it seems to have done, and then when it fails, then I know that it's coming back down again, and it just shows me that I am bracketed. I'm not getting out of that range. And at least I know that I'm not going to get bullish until I manage to overcome some of this, and I'm not going to get bearish until we manage to break out and start to drop lower.
More context than
Right,
trade.
context, exactly. So it helps me to identify bracket trading. And I'll show you another one. Here's another bracket, and notice this one is trapped in the upper quadrant of the current week and in the low quadrant of the prior week. And this is really helpful also because then you can see if I can't manage to break out of the midpoint of this prior session, then if I do have a breakout to the downside, I know that that's the direction I want to be in. So you can see that you're bracketed, contained here, and based on the fact the information that you have from the prior week, you've never been able to have a single close above the mid of the prior week. That should make you have a bias of being bearish, and the minute you see prices heading lower, you want to ride that particular move.
And then when do you become bullish again? When it comes back into that consolidation?
Right. Here's when I become bullish again. I have a high volume node, I open above it, and I'm well below value. So, and I probably would have an absorption trigger down here somewhere to verify that. Not only that, notice, even though my software didn't identify it, I have a low volume node, or even a, what did we call it, a valley in this zone. So I do have a low volume node above a high volume node, and my prices are heading higher. So now I have that wind behind my back that I always like, that makes me feel comfortable in taking a trade above it. So if I'm trading shorter term, I would be mindful of this level, and once we get above it, I would be looking to go long on the shorter time frame. Context is everything.
This is a brilliant session, though.
Thank you. I appreciate the compliment. Thank you.
No, truly.
Yes.
A high volume node, how do you consider a high volume node? Like in relationship with all the volume of the day? Or?
In this case, it's really easy to identify them visually, because even if my software didn't do it based on prices, because the way that the software does it is it takes a look at the range of prices, and it has to have 20 prices above it and 20 prices below it that were not, that this price was lower than those. So in some cases, I may have one, let's say, with only 18. The software will not identify it, but I have to know what I'm looking for, and so visually, I need to be able to, and that's the difference between just relying on the software 100% and understanding why I'm doing what I'm doing and why I'm looking for those things. And so, again, why is this important for me that I have a high volume node here followed by a low volume node? Why would this be bullish?
Well, you'd expect it to flow right through the low volume.
It flew,
Broke away from
exactly, the
selling
price sailed right through it. So what it's identifying for me is bullish momentum, right? And not only that, if I wasn't convinced during that day when it closes above it, like that, boy, I know this day is going to be an up day.
Went down and kissed it and went again.
That's right. So when it comes down here, this is where all the smart buyers are buying. And if we were to draw a line, okay, I hope that you see that this is not a coincidence. That the low volume node happens to almost line up with the low of the prior day. Okay. It's a coincidence and it's random for those who haven't come to this session. All right. For you, there are no more coincidences. There's nothing random about the market. Yes, sir.
And if you're buying on that second day that turns out to be an update, below that high volume node, that's below, that's where you're wrong.
Yes, if you're buying down here, I would be leery. You're absolutely right, because we're coming back to probably test this high volume node. If it tests it and then starts coming back up, I'm okay. Rarely will you see that though, because also this is happening below value. So there are several factors that are indicating that, in fact, there's strong appetite for the move up, and we've reached exhaustion at the bottom.
And would you say that's the reason that these levels are important is because these are the levels that the big money are actually paying attention to?
Well, certainly they're paying attention to it, but more importantly, they created them. Again, that's why they didn't happen by chance. They did not happen randomly. So of course, if they created them, they're paying attention to them.
I'm going to get long here. Guess where the market's going?
Exactly. I mean, why do you think the market drops down here and sort of picks up and starts heading back higher from there. Why didn't it just, as soon as it opened, continue to go on right away? It could have easily done that. And why does it, in fact, stop right at this level? Coincidence, of course. Yes.
So earlier on, we talked about the quads, and you had a 3/4 line and a 1/4 line. I don't see that up. Do you use that at all?
Sure, absolutely. Relative to the prior week, where are we now relative to the lowest quadrant of value of the prior week? In this case here, when we are here, where are we relative to the lowest quadrant of value of this week? Easy question. Not only lower, significantly lower. As a matter of fact, if we were to extrapolate from what I've taught you and give you a little bit more advanced stuff, take the quarter from this value area, draw another line for 1/4 and another quarter, so half the value area, and you'll find another one of those silly coincidences. It's going to match the bottom of where we are. So it's 1/2 of the value area to the downside on the next week. That tells the professional trader we're overextended. This is time to buy because we've deviated way too far from value on a major uptrend in the market. I love these nice coincidences, you know, how they work out. And by the way, this is another technique for projection. If you take a look at the quadrants and project above, it will help you identify. So for instance, here, if I take my mid and then put it on top of this value area, you're going to find that this market ended up equal value area approximately above this value. Twice that. So by that logic, if we go on to the next week, if we're up here somewhere, we're probably going to drop because value shifted a little too fast. We're going to have a retrace or at minimum a consolidation.
I've found that, I'm going to do it on these value area high and low, but I've done it on clusters. I found that a 13%, 13.2, or a 113.2 can be very strong rejection areas when you go back into that cluster. If you get up to a 27.2 or a 38.2, those are people either taking profit or late longs or shorts coming in, and then you see a little bit of rejection.
Now, the 13 is definitely a Fibonacci number, but the
Yes.
27 is not.
27.2.
27, it should be 28, isn't it? The next
No,
level?
27.2.
27.2, okay. Fair enough. So the Fibonacci's work as well. I'm going to test those, by the way. I will take a look at that.
Is this what your 12-hour courses or 15-hour course is all about, whatever that is? 12-hour course.
No, this is what this course is about. None of this stuff is in the other courses that are online.
This is in your book.
No, it's not in the book.
Ah.
Well, okay. There's other stuff in the book. The book is really about the basics. Okay. And truth to be told, no professional trader will ever give away all of their secrets. Okay. I won't lie to you. Okay. Of course, everybody knows things about the market and will share X amount, but will not give away all of their secrets. Now, you've paid good money to be here, so you deserve a little bit more than what would be in a book or what would be online. And so a lot of the stuff that I'm sharing with you, you're not going to find out there in public. And I will tell you also, you probably don't want to mass share it because it will hurt all of us. They will change the patterns of the market if everybody is doing that. That's why candlesticks today and candlestick patterns are worth, I don't want to use bad words, but you know what they're worth. They really don't work as they did back in the 80s. Okay? Why? Because the candlesticks were bad to start out? No, because the market makers know that, and they will create all kinds of interesting looking candles like this. Isn't that a, what's that called? Is that the no, the hammer?
Dragonfly or something?
Yeah, and it's supposed to be a very powerful up candle, right?
Yeah.
Look what happens after that. It wipes it out.
Yeah.
And remember, there are no coincidences. This is not random. This was planned. I'm sorry?
It's a bearish engulfing.
Of an up hammer or whatever, you know. Right. So how many candlestick traders do you think saw this and then saw it take out the high and immediately went long at this point?
That's why I went along with that.
I call it they went wrong at that when we broke out the high. They went long, but really they went wrong. Because what they didn't know is, wow, I'm heading right into a previous developing volume point of control. I'm running right into the wall. And I'm blind, I don't even see the wall. Why? Because I don't have that type of a chart. I'm not doing my homework. I'm not looking at context.
So, you only got a couple minutes, but could you review what you want us to take away from this? Just the quadrants and what side we close?
Okay. Not just the quadrants.
No, not
You know,
just-
anybody can just draw them, but where you are relative to the prior quadrants. That helps guide you. You know, it gives you a yardstick.
Where you close relative to your value.
Right, exactly. So now I'm not just looking at this huge value area. I break it down into segments, and I want to know where I am relative to those segments. And more importantly then, I begin to plan my trades accordingly. As we pierce through each segment, then I know the bias to which side, because that's where prices are moving, that's where volume is shifting. Okay? That's one key takeaway. Another important takeaway is utilizing the benefit of the profile in terms of the key levels that it shows us that we can now pinpoint that other people really are not paying attention to. And this sort of puts you in a different league.
It's like the market maker's plan for the day, what they're going to do that session.
Right. Or what is their plan for the bigger picture? Okay. Okay. When they've committed, when we have a developing volume point of control, that meant that on a weekly basis, this was the highest level of participation. There was a lot of money. There was a lot of capital that was thrown there. I have to pay attention to that, because that doesn't mean that it was just done at random or coincidence. You know, somebody had a plan. And that's what I'm trying to do as sort of the little ant sitting on the elephant. Where's the elephant taking? And I'm trying to figure out where they're going. That's how you use the profile. Any other takeaways from this that you can think of?
I'm just looking at the coiling that goes on. After you make the low, you got 1, 2, 3, 4, 5, 6 days. And then that 6 days.
Which week are we looking at?
The last.
This week here.
Yeah.
So we have first day,
Yeah,
second day, third day, fourth day.
Fourth day looks above value and then fails and comes all the way down. You see that shakeout?
Okay. Yes, this one right here?
Yeah.
Oh, absolutely.
So you
But notice,
bought it
but
on
notice.
breakout, you're screwed.
Notice what happened here. This was sending us down every time. But now notice the new development. Where's the next developing value area? See what happened? The developing value point of control shifted lower.
Right.
When it shifted lower, what was that impact? When the volume dropped, did it drop to lift up and buy, or did it drop to push down?
Push down.
Push down.
Right.
So as you can see, prices continued to drop lower.
You had that shakeout, but then look what happened after that.
Okay.
You had a huge move up.
Yes, we had a huge move down, but then where did we end up closing?
Towards the top of the bar.
The close is very, very important. Where you close relative to these high and low volume nodes makes a big difference. If we would have closed down here and this was way up there, the probability would have been much higher that we are going to continue lower. But the fact that we were able to wipe out that entire loss with minimal volume, really, that means that they gobbled this up in no time. And then we closed above this.
So in other words, I'm asking here this, to take a breakout trade above that value line.
Above the value area high?
Yeah, you want
Actually, to be honest with you, I wanted to clear this developing volume point of control up here. I would be a lot more comfortable taking longs here, and then I would be ecstatic taking them here.
On a pullback.
I'm sorry?
Some kind of pullback to that level.
Right, right. Why would this sort of be my favorite place? Remember, this is a whole day, so I have a lot of opportunity. Why would I be so comfortable taking longs after this point?
Because you've broken away from value.
That's one reason. Why else?
It was old resistance from the previous.
Yes, but there's another reason that I've highlighted for you before that is very powerful, shows momentum on the chart. I'm sorry. Thank you. After A, low volume after A. Thank you. So there's the momentum. The momentum really began here. And notice, if somebody's going to tell me, well, I got in late. Late for what? These are days. Look at how many days.
Right, look what happened if you got in too early.
That's right.
You got crushed.
That's right.
Or
And
you
so,
have to wait.
and so that's why I wouldn't be thinking about longs until I see this particular close. I would be very leery taking a long here. I would have to wait. If in fact I get up to this level, I'm still apprehensive, and it probably came back down and then hit up. I don't know how that particular day developed, but I would be apprehensive. But once I clear this and the wind is behind my back, I am more comfortable. When I get up above here, I know it's smooth sailing from here on, especially since I've also taken out this prior developing volume point of control. And then notice, the next developing volume point of control was my next target, and then we continue on. This one would be the next one I would be concerned with, and so on.
Dr. Kepler,
Yes,
just
sir.
go back to the LV and the HVNs, how you mark them.
Okay.
Are they just the lowest volume node and the highest volume node every peak and valley?
Yes,
on the day?
yes.
Okay.
That's the best way to do it by hand. You can use the software to program it, but I explained the limitation of the software because you give it a price range, and if it misses it by 1 or 2 ticks, it won't highlight it for you. Because if I say 10, then it looks 10 above, 10 below, and if I had 9 below, then it isn't highlighted. Okay? All right, are you hungry yet?
What about the FOMC?
Okay, oh, what about the FOMC?
That's what's
It's,
going to happen.
okay, can we fire up a chart off CQG?
While he's doing that, Dr. Kepler, your basic generalization of a high volume node and a low volume node, do you find that the low volume node is more for areas of rejection and probably good entries, and high volume nodes are profit taking?
Well, high volume nodes could also be initiation. So they're not always profit taking. If they're at the top, it could in fact be profit taking, yes. If they're at the bottom of the move, they're really initiation to push prices higher. So there, I have to look at where it really is to attribute to it what's going on. Okay, do we have, no, can we do, okay, let's do, can you do a weekly profile on the candlesticks like I had?
No, I don't have that.
Oh, you don't have that feature?
What are we trying to see?
We're trying to see where we are in the week relative to the prior week, which quadrant, and the prior days.
Maybe we